Good morning, Paul Georgie from Allendale. It's September 10th, Monday morning, and grain markets started lower last night and firmed up. We're higher pretty much across the board in grains here this morning as traders, I think, are trying to adjust their positions ahead of potentially volatile midweek when we get the USDA supply-demand reports. That comes out on Wednesday at 7:30, and we've got FOMC meeting results later on Wednesday, and certainly the anticipation there is that there will be some QE3 announcement by Fed Chairman Bernanke. We've got other data coming out as far as the macro markets go. We've got the attitude there that we will see some easing by governments around the world and providing some stimulus there. However, the slower economy or slowing economy in China continues to create attention as factory output numbers there over the weekend came out at a 39-month low. We've also got a big day on Wednesday in Europe where the German constitutional courts will give us the opinion if about the legality of the stimulus package for the euro is legitimate, and if that continues. So that's going to be a big factor as well. Other things that are more directly focusing on grains is the supply-demand report that we've got on Wednesday morning. Estimates are for corn production to be lower than last month when the USDA lowered the corn production. We're looking at a 10.779 billion bushel production is what the trade average estimate is. 26.57 for soybeans. That's a 120.6 bushel an acre corn yield and a 35.8 bushel an acre soybean yield. Now, we've been talking about yields all along here, but the real question that we'll be looking for an answer on this report is, will the government change the harvested acres? Historically, they normally will wait until October to change harvested acres and make adjustments there. So it could even be a greater adjustment if they lower harvested acres, and how they play with the yields in this report and then in the October report. Wheat market is off of its highs. However, milling wheat in Paris has set back off of its highs considerably. We're also getting some continued focus on the Australian dryness in the western wheat growing areas. That doesn't look like any rain is forecasted there for the next 10 days. So continuing to focus on that and look at the overall production coming out of Australia. Brazilian weather, they've got some rain in the southern part of Brazil and northern Argentina over the weekend. The northern Brazil is still somewhat dry, a concern to traders as when a market starts dry or an area starts dry, will it continue? We do have plenty of time before planting in that area, so may not be as big a concern as being talked about right now. We do have harvesting progress out this afternoon. Trade's looking for about a 15% completion on corn harvest, a 1 to 2% completion on soybean harvest in the afternoon crop conditions report. The funds continued to buy on the CFTC report, showed that the fund buying continued in grain markets here last week, and certainly providing some support to the futures markets here as the anticipation is that the funds will continue to buy at the beginning of the month and possibly ahead of this USDA report. In the livestock trade, cutout values were lower on Friday, down 83 cents in choice, 16 in select. Pork cutout values were down as well, down only 34 cents. But the livestock situation, the high feed cost is causing liquidation in the pork complex. Also, the cooler temperatures that we've seen here in August and early September is allowing for a better rate of gain, and that is compounding some of the heavier weight problems, the larger supply of pork, and at a time where demand is slowed down. Now, we're anticipating some pickup in pork demand as we move into October, which is National Pork Month. There will be some featuring there and some help in moving products. Packer cutouts for hogs right now are near their record levels, near $18 a head. So that is certainly driving the reason why packers continue to buy hogs, but the supply is what's pressuring cash prices. A lot of reasons to stay in touch with Allendale's research this week. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I will talk to you tomorrow morning.